Good afternoon, ladies and gentlemen, and welcome to this afternoon's meeting of the Cambridgeshire County Council Audit and Accounts Committee. As you know, the County Council does allow filming and photography at its public meetings, so please feel free to take photos and to use social media during the meeting. Please, though, do make sure that your phones are set to silent or vibrate whilst the meeting is taking place. Now, this meeting is being live streamed, and a recording will be available to view later on the County Council's website. There's no fire alarm test scheduled for today, so if the alarm does sound, I'll adjourn the meeting immediately and we'll leave by the side doors to my left and use the external staircase to assemble in the car park. Item 1 is notification of the Chair and Vice Chair for 2026-27 and a change to the committee membership. Council met earlier this week, as we all know, and it appointed me, Councillor Chris Bowden, as chair of this committee for the forthcoming year, and Councillor Peter Vane as the vice chair. And we have one change to the committee membership to note. Councillor Rory Clark replaces Councillor Chris Poulton. And I'd like to express my and the committee's gratitude to Councillor Poulton for the year of service that he has given to us, and welcome Councillor Clark to this committee. One rule that we have, well, I've got plenty of rules on this committee, but one that we have is there is no such thing as a stupid question. So if you have any questions about anything, please do not hesitate to ask. In my experience, a member who is willing to make such ask such a question finds that other members will have been thinking the same thing but not had the courage to ask it themselves. So please don't hesitate to ask if there's anything which is unfamiliar to you or anything which needs explaining. Right, number 2, apologies and declarations of interest. Member services.
Thank you, Chair. So apologies for absence have been received from Mohammed Hussain.
Thank you, and I believe Emma Duncan's going to be just a few minutes late joining our meeting. I have a declaration of interest which I should make, and that is that I am a member of the Conduct Committee of the Institute of Chartered Accountants of England and Wales. So any matters to do with conduct for KPMG, I recuse myself from at the ICAEW, so there is no that conflict of interest is managed, but I thought I'd better put that on record given what we'll be talking about today. Any other interest? No, good. Can move on to item 3, which is the minutes of the meeting of the 28th of March and the minutes action log. Now, the public minutes are included in the published papers, and the confidential minutes have been circulated separately to committee members. If there are any questions of accuracy on the confidential part of the minutes, we may need to defer approval of that to the end of the meeting and consider moving into private session to discuss that. But may I ask if the committee, if anyone has any objections to the accuracy of any parts of the minutes which have been circulated, please? We have no objections. Any objections on the confidential side? No, well, we can then, in public session, agree both of those, and I'll be happy to sign those. I take it these are the documents. I'll make sure I sign those and give them to you, which end up by the end of the meeting. Next, we move on to the minutes action log. Do any members have any questions or comments on the minutes action log, please? Peter.
Thank you, Chair. Relates to the minutes from 23rd of July, the actions from that. And the committee requested a copy of the Internal Audit's report following its review of the council relationship and so on, this Land Limited. And we were told that once this is agreed, probably in May 2026, it will be made available to the committee. Are we on schedule to deliver that?
Thank you, Councillor.
Yes, please.
I think we will probably just miss that deadline and it will be early June. The draft has been circulated, but we're making some sort of last amendments before it's finalised.
Thank you very much indeed. Any other? Ricky?
Thank you. I'd just like to ask, are we making any progress on the send risks?
Well, this may, of course, come up later in the meeting, but since we are talking about it now, is there any progress, please, on that?
Thank you. So for this meeting, we have papers on the internal audit service, which includes a very light touch on risk management. To the next meeting of this committee, we will be bringing the annual risk report and a full update of the corporate risk register. So that will bring a far more wide-ranging update on send risk. There is within the papers. I'm going to struggle to find this section now, apologies. Within the internal audit annual report, there is a section at 4.1.9 of that report, which looks at one of the outstanding essential actions from the dedicated schools grant safety valve audit, and that does give some information and context on work that's ongoing regarding the send risk, so that there is a small update there, but a fuller update to come.
Thank you very much indeed. I have the Chief Executive first and then the Section 151 officer, if you don't mind.
It might be the same.
We'll see if we're talking to the same item in a minute. Whilst it's not on the agenda, other than in the manner Mairead has mentioned, Chair, I would just note for members of the committee that the County Council is currently working on the development of its submission to the Department for Education in line with the requirements for authorities like our own to produce a SEND reform plan aligned to the government changes and policy reforms, including funding changes. The deadline for submission, I think, is around the 19th of June for us to make that submission to government. I would note that that will be going through appropriate governance with the Children and Young People's Committee first, and obviously ongoing review of SEND performance, risk management and issues is also scrutinised at the Children and Young People's Committee. So just to reassure members, that gets the attention it deserves from the appropriate Service and Policy Committee. Clearly, as and when matters come up through audit activity, it also comes here, and members have previously heard the assurance statement from the Executive Director for Children, Education and Families for the last 12 months, where some of these issues were discussed as well at this committee. Thank you.
Thank you. And Michael, nothing to add? You're entirely correct, Vicky, to raise this point, because if you look at a combination of both the seriousness of the risk and the likelihood of risk, looking at the combination of those two, SEND is right at the top of that category. So it's entirely appropriate for us always in this committee to keep a close eye on that. Although one hopes that in the medium term that that may change, but we'll wait and see. And at least we do have a timetable for action on the next stage of that. Any other comments on anything which is on the minutes action log, please? No, good. We'll take the minutes action log as noted. Item 4 is petitions and public questions, and none have been received this month. Item 5 is financial reporting and related matters. Stephen Howarth, the head of finance, will introduce this report. And we're also joined by Emma Larkham, who leads the KPMG external audit team. Members will consider the officer report first and then turn to KPMG's draft audit plan for 2025-26. Stephen first.
Thank you, Chair, and good afternoon, everybody. So, as you say, Chair, the report brings an update to committee on the current status of the 2025-26 draft statement of accounts, as well as updating on the position of external audit, and then colleagues from KPMG will present their audit plan alongside this paper. So turning to the draft accounts, so the 25-26 financial year ended, as you know, on the 31st of March, and after that the finance team and staff across the organisation go through a process of ensuring that necessary accruals are processed to match income and expenditure into the correct year, and some detailed accounting work on capital and fixed assets takes place as well. So that broad work concluded around the third week of April, putting us in a very good position in line with our timetable to progress into the technical part of the process, where the accounts team at the council pulls the statement of accounts together and prepares the core statements and the disclosure notes. So we're on track with our own internal timetable to have the draft accounts published by the end of June this year. Any work there dependent on third parties, particularly the pensions actuary, the property valuer, and this land for the group accounts is in hand. Turning to the eventual audit of the 25-26 accounts, KPMG will introduce their plan and timetable, as I say, but to flag to this committee that it envisages fieldwork over the autumn period, sort of September, October time, to hit the statutory backs update, which is this year, is at the end of January 2027, so a month earlier than the last couple of years. With that fieldwork starting in probably September time, there will be some preparatory work that needs to take place in August, sort of work on audit samples, etc., which will fall within the school holiday period. But that's all planned in terms of capacity internally. It's worth me finally flagging to committee again that we expect the accounts for 25-26 to be disclaimed, as I'm sure KPMG will introduce in a way. So that means that the audit does not have enough assurance to form any opinion, and that continues to stem from the lack of audit in 22-23 and the shortened audit the year after as part of the national issues with auditing the local government sector. So we're now also engaging with KPMG, as they'll come on to again, on their building back assurance work, which, as I say, they'll talk more about alongside preparing the draft accounts. And I hope that means that we can proactively work to ensure that in due course we move on to modified and then unmodified opinions. But I'll leave the intro there. Thank you, Chair. Fairly brief this month.
Thank you very much indeed, Stephen. Does anyone have any questions for Stephen before we go on to KPMG? Ricky first.
Thank you, Chair. Now, I know I asked questions on this before in regard to disclaimed opinions, and I got an answer. But sitting here in an Audits and Accounts Committee, I want to ask everyone really, why are we still accepting disclaimed opinions? So, and what's the exact cost of rebuilding assurance to our taxpayers? Thank you.
I'll let Stephen answer this. Well, in fact, if Michael may wish to, either Stephen or Michael. But it's also a very good one to ask Emma as well and to get the explanation from Emma. Stephen first.
So, I mean, to take the second part of the question first, in terms of cost, obviously the council is trying to manage or will manage this within its own existing resources. There will be an additional cost, I imagine, with the external auditor and the additional work that will need to take place there. In terms of why we're still in a situation of disclaimed opinions, and again, KPMG may wish to expand on this, but fundamentally missing a year of audit, particularly in 22-23, means that a couple of main things continue to have limited assurance over. So, for example, there are property valuations that's done on a cycle. So there will be property valuations that were done for that year of accounts that were not audited, and so the auditor still can't get any assurance over those values, and they can be quite material sums on the balance sheet. And then all of the movements through the sort of the income expenditure statement, the movement in reserve statement, feed into reserves, whether they are usable reserves or the much more complicated unusable reserves, and those movements form the opening balances for the future year, and still through the subsequent years transactions still form the balances. So it will take KPMG some time before they can be assured that what happened in that year is not likely to have produced a material misstatement. But I don't know if there's anybody who wants to expand on that.
Although I know Emma hasn't had a chance to speak yet. Emma, would you like to expand on that particular answer, please?
Thanks. Thank you, Chair. So yes, Stephen's quite right. So the issue that we have is that we've got a year where there was no audit work completed. And then for the 24-25 year, due to that backstop date, the completion of the prior year work, etc., there was limited work. So we've then also disclaimed the next subsequent sort of periods. That essentially means what you have is a whole year of audit where there's been no work done whatsoever, and that then carries forward because that affects your opening position. So Stephen touched on earlier that one of the key things that we will be doing this year is around the process to start rebuilding that assurance. The first piece of that is essentially doing a risk assessment, which looks back and says, actually, where is there material risk in that period which has been disclaimed? And that's already commenced, and we're working through that. So that piece of work will be processed this year. And from that, we will be able to identify if we need to go and do detailed testing on any of those balances within that year that was disclaimed. And that, again, hopefully we'll be able to conclude that this year. And that's the first step of moving towards an unmodified audit opinion, as Stephen mentioned.
Michael.
And so the only other thing I'd add, Chair, is that if we go right the way back to the start of this, back in the government's decision back in 2014, which saw the audit fee dramatically reduced over a period, and then we look at the fact that the audit fee for the year that was missing, which was our previous auditors, was obviously therefore significantly reduced because we weren't charged for an audit that we didn't get. whilst we do now see a fee increase, when you look at it across the period of time, there is not a cost impact, even though we'll manage it within the year. I think that what public sector got was a fee for which it got the service that it probably would expect. And that was the error that kicked off this process all the way back in 2014. And I think that was very short-sighted in terms of the government's decision at that point in time to save a few £100,000, resulting in all of this.
Thank you, Michael. And Peter, is it about this particular issue? Do you want to add to the answer so far?
Very much follows on from Ricky's question, really. And we can understand here today that the accounts for 25-26 are to be disclaimed. We understand the reasons for it, the background to it, and so on. But I think it's a matter of public confidence in our council. And I think it's important that we have some idea of at what point it will be possible to draw this matter to a close so that future accounts can be, confirmed.
Thank you, Peter. And it's very true. Public perception is very important. And for that purpose, and what hadn't been emphasised, because everyone takes it for granted around this table, I'm sure, is that we are not unique in Cambridgeshire County Council as far as this is concerned. So far as I'm aware, all or virtually all of the principal authorities, principal councils in this country are in exactly the same position. And it's really difficult that once you lose that assurance because you have had no audit for a complete year, then your figures and eventually your comparative figures are still uncertain enough that it makes it impossible for any auditor to get the necessary amount of assurance to avoid a disclaimed opinion. Again, Peter's raised a very valid point, and I'm going to put Emma on the spot, but she undoubtedly expected the question anyway. Could we expect that the disclaimed opinions may, and I'll emphasize the word may, finish?
So if we are able to this year complete, so during the 25-26 audit process, complete the risk assessment and complete the substantive testing that we need to, that would enable us to move from a disclaimed audit opinion in 25-26 to a qualified audit opinion. Now, that is obviously caveated on a lot of things because we haven't, got into the detail of that testing. But in an ideal world, that's where we would get to. And then following that, you then move to an unmodified. So it is not in the really far distant future. But I said it is dependent on being able to complete that risk assessment during the year. What is beneficial for Cambridgeshire is that you've only got the 1 year of fully disclaimed, i.e. when no audit work was completed. When we have been auditors for 23-24, 24-25, we were able to complete a significant portion of work, so there isn't no assurance at all from an audit perspective in those 2 years. So moving in a good direction.
That's extremely helpful. Thank you, Emma. And I fully appreciate you not giving us any guarantee there. But it may well be the case that next year we only have a qualified opinion to consider. And then the year following, it may be unqualified. But unfortunately, we won't be considering it then because we probably won't exist. And it will have to be considered by the new unitary authority or authorities. And how that will work, I dread to think. I did see Chief Executive. Did you put your hand up? And then Gareth.
Thank you, Chair. Just perhaps picking up the point and recognising this isn't even just a local government issue, it's probably worth me making clear back to the Vice Chair's comments around trust and confidence that the whole of government accounts have been disclaimed for 3 years in a row now. And that was certainly a matter that the Permanent Secretary at the Treasury was required to explain at the Public Accounts Committee. And that's because, of course, the National Audit Office have chosen to disclaim the government's own accounts, which include, obviously, local authority accounting as part of that process. I just thought, Chair, it might be worth noting, and it's helpful in the context of the comment you've just made, that the Director General for Local Government Growth and Communities at the Ministry of Housing, Communities and Local Government told the Public Accounts Committee on record in December 2025 that the department's aspiration, and clearly he was choosing his words carefully, the department's aspiration was to have no disclaimed or qualified local authority accounts by 2027-28. But then, of course, he didn't go on to talk about the impact of local government reorganisation as part of that aspiration. But I think it's really important to recognise that as an individual authority, substantial progress has been made. So we should have much greater confidence in the work we're doing. But you are absolutely right to say this is a whole sector problem. It's a whole of government problem. And where we have senior officials sitting in front of the Public Accounts Committee saying their aspiration is to achieve that by 27, 28, I think that gives you an indication of how substantial the issue is and how long-standing this has been. And I think we see that the roots of this go right the way back to the Audit Commission being abolished. Thank you.
Thank you for that, Graham.
Thank you, Chair. Whilst I accept it's our aspiration that these things are going to happen, can I confirm with Michael or Stephen that all the stuff that KPMG require about property valuations, movements in reserves, and so on and so forth are going to be provided in a timely way such that KPMG can really do everything that is needed to get a proper opinion?
Thank you very much indeed, Graham. And as a former chairman of this committee, of course, you've quite correctly preempted the question I would have asked. It's entirely appropriate for us to ask that question about where we are now. Do we anticipate that we will be in that position when it's necessary for us to be? And particularly the third-party suppliers of information, and most of all, the pensions actuary for the triennial revaluation.
So the short answer is yes, we are engaged. We're very keen to engage in a very timely manner with KPMG's work on building back assurance, balancing alongside certainly at the moment and for the next 6 weeks the production of the accounts as well. As the report says, in terms of the production of the accounts, the reliance that we have on third parties for information, everything is broadly speaking on time as we expect, and that doesn't fall too much in the building back assurance part of things either. But as I say, we're very keen to work very quickly with KPMG on this. We appreciate the importance of it.
And again, preempting Emma's introduction of the draft audit plan. Emma, do you have any comments about where we appear to be at the moment in terms of the provision of information to you and the promise of provision of information to you?
Yeah, so we asked management for a number of documents. I did check with Harry just before I left today, and we've had the majority of those. So they're sitting with us now to start that review process, which will happen over the next couple of weeks in terms of the initial risk assessment part that we need to do for the build back assurance. And then once we've done that, we'll then have a further information request, which we'll deal with as part of the main audit. So far, everything's as I would ask for.
Thank you. When you said you have had the majority of the documents requested, are some late, or is it just that there are others which have yet to come and you're not so worried about the timing of them?
I'm saying majority because he told me the majority. I haven't gone and checked. But what we need to get started, we've got. So as we go through, we'll obviously ask if there's any additional bits we need. This is quite a unique piece of work, so it obviously will be a bit of an iterative process as we go through.
Thank you. Graham, any further question on that? Good. Ricky.
Thank you, Chair. And I'd like to welcome the fact that limited work has been done and that we're looking to conclude it this year, and that the majority of information that was required has been submitted to yourself. So that's good. I welcome that. But I'd like to go back to my original question, because I asked what the cost to the taxpayer was for building back assurance. Now, I heard there was additional cost, but I didn't get a figure. And seen as our chair also mentioned, the taxpayers, need assurance. They, and they deserve clean accounts and value for money. I'd like a figure if possible. Thank you.
Thank you very much indeed, Ricky. I'm not sure if anyone would like to volunteer a figure because you've got to take into account both costs which have been missed, but also additional costs which there are, and they're not in the same year either. So if any officer feels confident about giving an answer to this, I'd be happy to hear from them. Otherwise, possibly after a bit of thought, something could be circulated to members of the committee. But Michael.
Yeah, I don't mind answering at this point in time, Chair. Clearly, the audit for the year just closed in terms of 25-26 will be what it'll be, and we'll have that audit process. That's what I was referring to, though, in terms of you need to look at this over a 10-year period in terms of the scale of the audit fees and now what's actually being built back in. But if you refer back to Stephen's first answer, we have this budgeted and will be in budget. So in that sense, it's a nil cost to the council taxpayer.
When you say nil cost, you mean nil cost as opposed to budget?
As in, we can manage. We will manage within our budget, and if we look across the 10-year period, actually, what we saw is a reduction in the audit fee that supported the budgetary process during those years. But we've recognised, and you'll see in the IFMR in a couple of weeks at strategy, resources, and performance, the setting aside of reserve for the future provision, and we also have the audit reporting grant. I can't remember what that's called, which is to cover some of those additional fees. So there is no new additional costs arising from this.
Thank you very much indeed. Ricky, are you happy?
I'm rather confused because I heard initially there was additional cost, but I understand what you're saying in regards to it's built, it's got to be looked over a 10-year period and it's built into the budget, so there's no additional cost. But I'm not comfortable with the answer, and the reason being is because if there's no additional cost because it's within the budget, but if we didn't have to do this, that the sum that we are spending on it would be available to go elsewhere. Am I incorrect?
Sorry, Michael?
So we have to have an audit, first of all. We have the audit plan, we have the audit fee, we have the audit budget, and that was built into the medium-term financial plan. So we have budget to cover the audit.
I do get what Ricky's talking about here. Could we take this offline and I'll deal with it if I have a conversation with you later, Michael, and we might be able to come up with an answer. I understand exactly the question you're raising, Ricky. I don't think there's a simple answer to the question, but if I could discuss this with you, Michael, after the meeting, and we could possibly give some more detail to Ricky to try to answer the question he's asked, if that's acceptable to you, Michael. Yeah, good, thank you. Right, Emma, do apologise. Oh, sorry. Who was it, sorry? Lewis, my apologies, Lewis, didn't see you.
Just a clarification. And we know that the disclaimer arises from a lack of key statements. Do we know at this point if this is going above the or within the materiality threshold or not? But...
Emma.
So a disclaimer in itself is very material because it means we've got no assurance. So the risk assessment piece that we need to do, we'll look back, and when you are doing a risk assessment and looking back at prior year information, you can apply a slightly different threshold. So that's the step that we need to do, where we identify things which we consider are material over that disclaimed audit period. We will then do specific testing related to that year that had the disclaimer. So as Stephen mentioned, some of the property valuation, for example, is an area I would expect us to do some work over to give us the coverage in that year that we were missing.
Thank you. Thank you very much. Emma, I do apologise. I didn't give you a chance to introduce your draft audit plan, which has been circulated to us all and we've all seen it. Would you care to say a few words about the draft audit plan, and we'll see if there are any questions from members of the committee?
I will do, Chair. Can I first just touch on our fee and costs, I suppose, that we've got to date for the rebuild and assurance, just to give that bit of clarity. So you'll note on page 3 of my document, page 25 of the pack, we've given an initial estimation of the risk assessment cost, which is £12,000. The substantive work we will continue to look at, obviously, as that develops the cost. Worth noting that MHCLG have provided funding for the cost of the audit. So again, that would be factored into Stephen's position. So in terms of the document that you've got in front of you today, so this is our draft audit plan for the year. I will take it as read, but I'll just touch on a couple of key pages if that's okay. So if I start on page 26 of the full pack, or page 4 of my document, this just sets out our materiality levels for the year. They've moved slightly from last year. That's just a reflection of the overall position of expenditure for the authority for the year, but otherwise percentages, etc., remain the same. And then if I go down to page 28 of the pack, page 6 of my document, this is essentially the summary of our key risk areas for the year. So A lot of these are consistent with what we've had for the past couple of years. So the valuation of land and buildings, the valuation of investment properties, those both remain as significant risk areas. And that's really driven from the fact that we've got quite a high level of estimation and sort of judgment involved in those valuation processes. Management override of controls. So that's an audit of risk that you find on all audits and is sort of reflective of the position that management could find themselves. So there we look at journal controls and key estimates and judgments. The valuation of the pension obligation. So again, that's an area where there is a lot of judgment and estimation in how that is calculated. And this year we do also have the triannual valuation. So that just adds another level of complexity for this year. Risk 5 that we've got there is linked to the long-term debtor in regards to this land group. The committee will be aware, obviously, of a lot of the work that we did on that last year and also the value that is left there. We're going to do some further work that may change its risk profile down slightly, actually, because of the level of exposure that it does now remain. But I've kept it currently as significant, given that the work is still not concluded in that area. The other two areas just to flag there, which are not significant audit risks, but areas that we will report back to the committee. One is around the accuracy and valuation of the PFI liability. So this is one of the areas where we've slowly moved forward with our work each year, but we haven't ever quite concluded it all. This year we will. So we did a lot of detailed work around the models last year. This year we'll just make sure we're happy that that all flows through and do the full audit of those balances there. And the last one is just around making sure that we're comfortable with the classification of some of the expenditure to make sure it's classified as revenue, not capital. The next couple of pages provide much more detail in all of those risk areas, so happy to have any questions, but I'll take it as read. And then if I just go down to, so pages 42 to 44 of the pack just set out our approach to value for money. We will bring our risk assessment for value for money back to the next audit committee. And that will give you the sort of detailed narrative as where we're heading on value for money. And then in terms of the appendices, we've noted our audit timeline, the fees as they stand for this year, and also a confirmation of our independence as your auditor. So I'll pause there. Appreciate that was quick, but I was taking it as read. So, but happy to have any questions.
Excellent. Thank you very much indeed. Members, any questions? I saw Ricky first and then Peter. Ricky.
Thank you, Chair. In regards to the rebuilding assurance, I think 12,000, I think, was the figure given. I think it's already too much. How are we going to cut it?
I'm going to let Emma answer that, if she can.
Was the question?
How are we going to cut the £12,000 estimate for the cost for assurance?
Well, that is subject to the work that we need to do. So it could go up, could go down. So that is an estimation based on the amount of time it takes to do that work. I think it is also worth remembering that all audit fees are subject to PSAA approval. And they will be obviously dealing with all of these, and there will be a moderation process across all councils in terms of the fees that will be accepted. So that will be the process. So we submit our time and cost to PSAA, and they then moderate that down.
Thank you. Peter.
Thank you, Chair. The report includes a statement on page 26, which I'm sure is significant, but since I don't quite understand it, I'm having difficulty assessing the significance. Perhaps it could be explained to me as a non-specialist what it means by saying that the group includes a consolidation of Cambridgeshire County Council and this land limited, yes. And because this is greater than 100%, as the intercompany loan is eliminated in the consultation process, I wonder if you could perhaps put that into language that I might better understand as a non-specialist.
Thank you very much indeed, Peter. I must admit, as someone who has got experience in this, that caught my eye as well, and I had to look at the explanation there to understand it. The 100.2% is a counterintuitive figure, but an explanation is given. I wonder if you could just explain that slightly more clearly than the very short explanation which is in the paper.
You've essentially, because you are consolidated, you've got two aspects that you've got that you're essentially adding together. But as you add them together, so on the adding together, they're bigger, and then you have a bit that is owed and sort of owed to each other. So you take that out. So your whole is slightly bigger to start off with, and then you've got a shared element which gets taken away, which takes you back down to the 100%.
So we're basically talking about double counting before the double counting is eliminated through consolidation.
Okay, that's much nicer explanation.
Right. Thank you. No.
That confirms that it wasn't something I should have worried about, merely because I didn't understand it. Thank you.
Thank you. But it is very interesting, I have to say. Vicky.
Thank you, Chair. It's very interesting. I'm trying to get my head round it still, unfortunately. So who owes who money? That's the question.
Emma.
So this land owe the council money.
I was expecting that response. Thank you.
Good, but it isn't the only balance to be taken into account in the figures and in the consolidation. A couple of questions from me, if you don't mind. First, really quite simple, but I don't know part of the answer. We've been given three different figures for materiality. We've got the materiality of 24.7 million for the group. We've got entity materiality, which I assume is for the county council, of 24.4 million. But then we've got performance materiality. Would you be kind enough to explain performance materiality, which is given us 16 million, please?
Yeah, absolutely. So the materiality figure, so as you say, so the 24.7 is for the consolidated group position, so the bigger piece of the pie. The 24.4 is for the council only. Those are the sort of maximum materiality level that we are looking at, in recognition of the fact that, you know, actually in aggregate, you've got different risks in different areas. When we do our testing, we use a lower level of materiality. So that's that performance materiality. So that's our sort of starting point. So we say, actually, we'll worry and we'll test about things at the sort of 16 million. And that gives us that gap to be able to say, actually, if we'd found an issue over here and over here, in aggregate, you've got some space because you've got a difference between your 16 million and your 24 million. So enables you to sort of recognise that risk.
Thank you. That was very clear. Thank you. Very helpful. A couple of pages later, on your page 6, the significant risks, I was a bit surprised to see that the greatest risk, if you're looking at the combination of both likelihood and financial impact, is given by looking as far up and to the right as possible in your diagram. And that actually lies in that one. We have the valuation of investment property, which is deemed to be a very significantly greater likelihood than an error in the valuation of land and buildings. I'm surprised about that. I wonder if you could explain why you believe there is that much more risk, likelihood of material misstatement for investment property, as opposed to the land and buildings, which I would have thought would be subject to very similar estimations.
It's ultimately down to the valuation methodology. So your investment properties are market valued. So therefore you have a different basis for valuation. So that's why we split the two risks out. And actually, historically, we have had material issues with the valuation of investment properties. So that is why that currently sits there. I would hope this year we might be able to see that move down its risk slightly, depending on the outcome of the audit.
So just to get that clear for me, the land and buildings, our own operational land and buildings, are valued at the lower cost net realizable value, whereas the investment properties are at market value, and therefore the market value is more susceptible to misstatement. Good, thank you very much indeed. Any other questions or comments? No, well, thank you very much indeed. Oh, sorry, Emma.
So I was just going to give one brief update, if I may, on the 24-25 accounts.
Yes, please.
Is that okay? So we had, the committee may be aware, we had an objection that was pending on the 24-25 accounts. We've been through a position of drafting a provisional response to the objector. That is now sitting with the PSAA for final comment, and then we should be able to issue that position. So that should hopefully be concluded in the next couple of weeks.
Excellent news. Thank you very much indeed for that. Right, so we'll move to the report recommendations, which are that we are asked to note the report and note the draft audit plan from KPMG, which is in Annex A, and no vote is required on that. Move on to agenda item 6, the internal audit annual report for 2025-26. Mairead Clayton, the head of internal audit and risk management, will introduce this report. Mairead.
Thank you, Chair. So this document is the annual internal audit report, which sets out my opinion as the head of internal audit on the overall adequacy and effectiveness of the organisation's framework of governance, risk management and control. So the purpose of this opinion is that it supports the authority's annual governance statement, and it provides assurance to members on the extent to which the council's control environment is operating effectively to manage risk, while recognising that no system of control can provide absolute assurance. The opinion is informed by the work of internal audit throughout the year, and that includes both assurance engagements, so that's classic internal audit work, and any advisory activity as well. And it also includes an assessment of the organisation's risk profile and takes account of relevant external assurance where appropriate. So, for example, that would include the opinion of our external auditors. So the key part of the report is the annual opinion, which is provided at section 2. This year, I have given a moderate assurance, which is a similar level to the previous 2 years. As you can see at section 4.1, when taken as a whole, the proportion of different internal audit opinions in 2025 to 26 across the different opinions of assurance is very similar to the previous year. Generally, we're seeing opinions are clustering around that moderate level of assurance. We have not issued any reports this year where a major organisational impact has been identified, nor have we made any essential recommendations, which is positive. There are some areas of the control environment where we have seen an improvement in control or reduction in risk compared to previous years. That includes some areas like procurement, project management. Equally, there are some areas where controls have been weaker, risks have increased, or where actions to address audit findings haven't been implemented in a timely way. Section 3 of the report provides some detail and a refresher on how assurance is given by the internal audit team, the meanings of the assurance opinions, and the way that the internal audit work has sought to provide assurance over different areas of risk across the entire council. Section 4 then provides an overview and analysis of the actual findings in year, gives information on the implementation of agreed audit actions, and it gives a general overview of assurance for each risk area covered. That includes things like the audits undertaken in year, links to the corporate risk register, and also looking ahead to the upcoming work in that area for 2026 to 27. There are also summaries of the work the team carries out on risk management, whistleblowing and counter fraud. I would note that this committee will receive the annual risk report in July and the annual whistleblowing and counter fraud report in November. So those reports will give a greater depth of detail in those areas. Then finally, just to draw your attention to section 7 of the report, this gives key information on the internal audit team's performance, quality assurance, including things like our compliance with global internal audit standards in the UK public sector, our delivery of the internal audit plan, team resourcing and continuing professional development, and the results of our customer feedback survey. Just to note that as part of considering this report, in line with global internal audit standards and the CIPFA Code of Practice, the Audit Committee must consider whether it has satisfied itself on the effectiveness of internal audit, taking into account conformance with the standards, internal audit's interactions with the committee, performance and feedback from senior management. I will leave it there and very happy to take any questions.
Thank you very much indeed, Mairead. Members? If there are no, oh, Peter first.
Yes, I suppose it is a question of what we mean by moderate assurance on the overall adequacy, because these terms are very important and easily misunderstood in my view. And the second question relates to whether that assurance is improving or not. And I note further down on page, let me see if I can find it, yes. Page 64 of the overall report, 66% of agreed audit actions have been completed, but this is a reduction on previous years. So perhaps you could expand on what moderate assurance actually means to the layman such as myself, and whether we are in fact going in the right direction on this.
Thank you, Peter. Mairead.
Thank you. So the opinion of moderate assurance, it's in line with our standard definitions for assurance opinions. So it indicates audit work has identified there are some control weaknesses that present a medium risk to the control environment. The control environment is mainly operating as intended, although some areas have been detected. So section 3.2.4 of the annual report provides some more information on how we consider those assurance opinions. The question of is it improving? I think that I would say yes, we're probably tending towards a sort of good moderate opinion as opposed to being at the lower level of a moderate opinion. As I mentioned earlier, we have seen that this year there have been no reports where we've identified a major organisational impact, no reports where we have issued an essential recommendation. Both of those are positive, and in previous recent years we have often seen one or two reports perhaps that fall into those categories. Some areas such as procurement and project management, I think we have seen a strengthening of the control environment, although I would note that compliance with the control environment is not necessarily always keeping up with the improvements in control. We can see that that's developed. As you note, 66% of actions completed at the end of the 25-26 financial year is a reduction, conversely, on the previous year, where we saw about 75% of actions completed over 12 months and similar to that in the year before. So that is an area where we've seen a reduction in assurance in terms of actions completed. But I would say that is probably balanced out by some of the more positive findings of reports as well.
Thank you very much. Yes, Lewis next.
Thank you, Chair. Yes, thank you for the report. And I see that no essential weaknesses were issued. We still carry the one from SEND and DSG from previously. And in the report, it says that the current plan still lacks key elements of measurable outcomes and prioritization. From an assurance perspective, does the internal audit consider the gap considers the gap, and we are only weeks away, considers the gap between that we have in this lack of measurements and the weaknesses compatible with the Department of Education requirements, and does this represent a material delivery risk?
Thank you. This action, I mean, there's a reason that we've included a lot of detail in the report from section 4.1.8 on this action. And part of that is to do with the really complex and changing risk environment that we've seen for this action. So initially, following the agreement of the action implementation, the implementation of a ICT system was substantially delayed. Now, in order to develop some of the action planning that we would like to see in this area, the service needs access to good quality data from an IT system that can support them to then develop an understanding of their baseline position, how certain actions will impact on that baseline. And so the delays in the ICT system implementation then had a knock-on impact on the service's ability to develop the action plan in the way that was envisaged when that audit action was agreed. Subsequently, we've also seen, at the time the action was agreed, the council was a part of the safety valve programme. That was then paused. The council then had to apply to restart that. There was a long period of delay where it was unclear really what the Department for Education wanted in terms of whether it was satisfied with the council's proposals to move forward. We then had the announcements around the end of the safety valve programme and the SEND reforms. So it's been a complicated interface really between the actual risk environment changing substantially in terms of the government regulations and expectations in this area, changing the risk profile, and also some complexity on the council side in terms of actually having access to the data that we needed to have in order for the service to be able to deliver this action. So we've retained the action because the service agree it is important. We do need to have this in place. But from an internal audit perspective, I think we do understand that there have been really substantial roadblocks to getting this action implemented, many of which have not actually been within the control of the service. And hopefully some of that comes across from the report, and the system implementation, I believe, is expected to take place this summer. So I'm very much hoping that in over the next few months, we'll be able to give some more assurance to this committee over the implementation of this action.
Thank you, Mairead. Lewis?
Thank you, Chair. Yes. So for the presentation of the plan that the Chief Executive was speaking just before, which is June this month, that will be ready. But then there is a second phase in which that may be tested. My question is really as to the assurance that we are in a position to support that whatever the plan says is being, we have the control mechanisms and we are actually in position to implement them.
Thank you, Mairead.
Thank you. So I think the implementation of the system itself and the implementation of the response to the government's reforms in this area are both areas that the audit team is following up on, but they are still under development. And so at the moment, we don't have that assurance, but it is something that we're expecting to be able to give.
Understood. Thank you. Come to you in a second, if I may, Vicky. The relationship between the internal audit function and senior management is absolutely crucial. And I'd just be grateful if you and possibly the Chief Executive could just expand a little bit on the comments made about the Corporate Risk and Performance Group and how that is working in practice to improve what we can take to be the way in which internal controls and internal audit is working.
Thank you. So the Corporate Risk and Performance Group is a group that was initially set up purely by risk management. We are now linking up with colleagues in performance to try to drive improvement jointly between risk and performance. Obviously, colleagues in performance have been through a restructure, and that has delayed some of the actions that we would like to take around that. But the group is active, it's meeting, and it's been a really good forum for our corporate risk manager to deliver some bespoke training on risk that is a bit more specialist, maybe not something that every officer in the council would need to have access to, but that is really useful for those officers who are involved in risk and performance. So I would say that the group is working reasonably well, and it's something that we'll continue to try and grow as a forum in the future.
Thank you. And from the senior management point of view, Chief Executive, have you got any comment to make on the work of the Corporate Risk and Performance Group?
Thank you, Chair. The Corporate Risk and Performance Group is actually not members of the corporate leadership team in attendance. It tends to be more the individuals working with Mairead's team in the actual performance teams, other parts of the council, obviously other areas like finance being involved as well, but definitely good cross-council representation and very strong support. One of the things we are trying to do and have been moving towards for some time is a more integrated approach to the presentation of performance, finance and risk. And that's very much what we're asking this group to help us take forward. Obviously, we had to have the right building blocks in place for that. So we've previously had good financial reporting arrangements in place. We've substantially improved the council's performance management framework, which is reflected in this opinion. And clearly, we also have substantially improved the council's risk management approach, which indeed external audit recognised in their last opinion. So bringing those together in a more integrated way is absolutely what that group is trying to achieve for us. Thank you, Chair.
Excellent. Thank you very much indeed. Ricky.
Thank you, Chair. Sorry, I've got quite a few questions. So I just want to, on the subject of the DSG action still being open, I heard the IT system was delayed. So I'd like to understand why. I also heard that the safety valve option was paused. So I'd like to understand why. and I heard that some of this or all of this is not within our control of the service. So what is happening with these then? How will we get it done, and what's being done to get it in control? Because this action has been open for 2 years now. And for me, everything seems to be delayed. I don't want to put a downer on this, but everything seems to be delayed, and we're getting a little here and a little there of improvement. And I don't think I've heard there's anyone actually in charge of the corporate risk management team. Is that correct? It's not. Okay. And I'd like to understand who it is on that. Thank you.
Thank you. Do you want to go first, Chief Executive?
If I can start and maybe address a couple of the points, and I suspect Michael will want to come in as well. So if I can address the issue around the safety valve programme, Mairead, when she was introducing her opinion, referenced that was paused. That was a decision of government, not the council. The government paused the receipt of any further safety valve applications from local authorities. The government paused considering any existing safety valve arrangements. In effect, ours was stuck in limbo alongside a number of others. And then in April of this year, the government advised all councils that the safety valve programme was stopping. And that's now been replaced with effectively their new send reform plan arrangements that we are responding to by the middle of June, as I've already indicated to the committee. So there was no pause on safety valve from the perspective of the council, which is a really important and clear statement of fact. In terms of the risk management point, and then I'll perhaps hand over to Michael to pick up the system point, because he's obviously responsible for our digital services, but works alongside the Children, Education and Families Directorate on this. On the corporate risk management arrangements, just to clarify, Mairead is the head of our risk management team. Mairead reports to Emma Duncan as the monitoring officer, who in turn reports directly to me. We have a corporate leadership team quarterly meeting on risk and assurance, which includes all of the executive directors, myself and Mairead. And Mairead and I have routine one-to-one meetings, both in her capacity as head of internal audit in line with the public sector internal audit standards and as head of risk management for the authority. So we routinely talk about those issues, and I get independent updates from her in addition to the updates I receive from members of the corporate leadership team. So I hope that addresses those points. And then if I may, Chair, I'll hand over to Michael for the issues around the IT implementation. Thank you.
Thank you, Chief Executive. Michael.
Thank you, Chair. So the system that's being implemented covers a range of services, 14 overall. That includes the send provision through the education, health and care plans, but it also extends to other areas such as early years and school admissions. So this is a huge, complex implementation of systems across the whole of children, education and families, which last October, the decision was taken to not go live with that due to a number of the data matches and tests that have been carried out. We're not in a state to move forward at a critical point in time of the academic year, particularly around school admissions. So that was deferred to the next available date, which is 2 weeks' time. So we are on track to go live with that in a couple of weekends in readiness then for just having that up and running before the end of the academic year. That will bring with it better holistic view of the child, because we'll have one system cutting across all of the data aspects for the children, but it also brings with it other advantages such as the portal access for both schools and parents in terms of the way that we record data, and therefore will produce better reporting data, which will give us better information in terms of making decisions around the reforms that have to be made in relation to, in particular, the high needs position.
Very much indeed. Ricky?
No, thank you. I welcome them answers. I'm really pleased. And apologies, Stephen. I did ask that question before, and you did answer it before, and I missed it on my notes. So yeah, you reminded me. So thank you very much.
Good. Thank you very much indeed. Any other comments or questions? I will just ask one thing which puzzled me a little bit. In terms of the internal audit work completed, the only item which had potentially moderate organizational impact but had limited system opinion and limited compliance opinion was the mental health Section 75 agreement. And that surprised me. I wonder if you could comment on why, if you were to have a league table, that would be at the bottom of the league table.
Thank you, Chair. So that the outcomes of that report we will bring to the next meeting of this committee with a more detailed update on the reasons for those opinions. I would be happy to also get back to you outside of this meeting, but I'm not sure I could comment on that audit accurately right now.
That's fine. We'll look forward to the next meeting with great anticipation. Thank you very much indeed. Right. If there are no other comments, we'll move to the report recommendations, which are that we're asked to consider the annual internal audit report for 2025-26, including the Head of Internal Audit and Risk Management's opinion on the overall adequacy and effectiveness of the framework of governance, risk management and control within Cambridgeshire County Council. And in line with Global Internal Audit Standards 8.3 and the CIPFA Code of Practice, we as the Council's Audit Committee must also satisfy ourselves on the effectiveness of internal audit, taking into account conformance with the standards, interactions with the committee, performance and feedback from senior management. Is the committee so satisfied? Ricky.
I just want to make a note. I kind of oppose the current level of insurance, but I'm satisfied with the direction that we're heading. So I'll note, but with strong reservation.
Thank you for that. Overall, we are satisfied. I'll take that as a yes. Thank you very much indeed. Oh, Chief Executive.
Chair, sorry, one thing I would like to say, and it's not material to the decision you've made on the report and noting it as members of the committee, but if I was to take you to paragraph 736 in the report, which is actually about the delivery and capacity within our internal audit service, I think it's worthy of recording actually, and recognises the work of Mairead and her team, but it's purposefully noting for the attention of the committee that the stability of the internal audit team has substantially improved from previous years, and during 25-26 financial year the team has actually delivered the highest number of productive audit days since records began when the audit team was brought back into Cambridgeshire from the former local government shared services arrangement. So I think recognising that we work for internal audit capacity in a highly challenged market, the fact that we now have a much more stable team that has delivered the highest number of productive audit days since we brought it back into Cambridgeshire County Council is a credit to Mairead and her colleagues. So I didn't want to let that pass without referencing it, Chair. Thank you.
I think that's the most helpful comment to make. Thank you very much indeed, Chief Executive. And I think we're all very grateful to Mairead for the work that she does and for the independence that she brings to that work, which is of vital importance. Right, item 7. This is an assurance report from the Executive Director of Finance and Resources, and Michael Hudson will introduce this report.
Thank you, Chair. And I'm assuming councillors are okay with me staying here as opposed to moving there.
I'm sure that we're happy for you to stay there, Michael.
Thank you, Chair. This is part of a series of regular updates from the executive directors to provide this committee with further information around the assurances related to each of our directorates. And clearly, my directorate covers finance and resources, which includes finance, procurement, insurance, financial transactions, property, customer services, and digital. And what you'll find through the document in terms of section 4, as well as giving the assurance statements, as will be usual from the other executive directors, I note that as the section 151 officer, I also carry certain duties in response to that role, and that also flows into some of the assurance framework that then operates throughout the council as a whole, such as the financial regulations. So I've included commentary on that. Clearly, the other functions, such as property, have other statutory responsibilities within those which they need to report on, which puts commentary within that. And like other fellow executive directors, then there is further commentary on where our position is in relation to outstanding audit actions. Clearly, as an enabling function that covers a substantial element of the resources provision for the council, it's not unusual that a finance and resources area will have the largest element of internal audit actions. However, clearly there are a number that are still outstanding, more than 12 months. Action is presently being taken to close those out. I accept that that's taken some time. We expect 8 of those to be completed by the end of June and the remaining 2 by September 2026. The report also covers risk. The Directorate clearly has a number of cross-cutting risks, most notably Risk 3 and Risk 8 in relation to financial standing and cybersecurity on the corporate risk register, but it also maintains service risk registers, the summary of which are appended at Appendix 3. We have 2 risks I'd like to draw attention to. The first one is our capacity around SharePoint storage, although mitigations are in place for that. And we have one increasing risk, which is the capacity within the insurance function to deal with the growing number of insurance claims. And again, mitigation has followed. Finally, the report touches on customer feedback, noting in particular the now 2-stage process in relation to the non-statutory complaints. And I will note that, and I've just noticed the number has disappeared here. We had 2 adult statutory complaints. That is because the service within finance and resources includes income management, and you'll hear in a couple of items' time in relation to that. Some of those relate to adult social care debt, and we have had complaints around those. I'll pause there, Chair, and happy to take questions.
Thank you very much indeed, Michael. Questions from members? Ricky first.
In regard to this land, can I get the current exact loan position and impairment and provision, if possible?
So as it stands at the moment, there is 59.9 million pounds worth of loans scheduled for repayment. The first of which is 30th of November 2026. The final one, I think, is September 2029. And I think there are 5 or 6 loans scheduled in between that date. There is then a further 58.9, I think it is, that is classified as a capital contribution and will be a performance-related loan. And on top of those, there is further interest payments due in relation to each of those loans.
Thank you. Just to expand on that question, as far as the interest payments which are due and the capital repayments which are due on the loans, to the best of your knowledge, is the company on target to meet those particular deadlines?
The latest reporting to the shareholder subcommittee confirms that it is.
Ricky?
No, thank you, Chair. You actually stole my next question.
I do apologise.
No, you're welcome.
Good. Any other questions from any members? I'm going to ask a question, and I'll try not to make it too personal. Do any of the risks keep you awake at night, particularly cybersecurity?
I'm an insomniac, so everything keeps me awake. We are very fortunate that we have an excellent team. We had at the last this committee just gone more detailed information in private session, which I hope was helpful for councillors. I am now 34 years into my career and 25th going into 26 shortly as a director of finance. So there's not much that doesn't trouble me, but not much that keeps me awake as a result of that either. I'm fortunate to have one of the best teams I've ever worked for.
Excellent. Thank you very much indeed. Chief Executive.
So just an observation, Chair, and I don't mean this to be facetious, and I'm not saying it to be funny, because Michael is genuinely an insomniac. So this authority also has the benefit of a finance director that literally never sleeps. But nonetheless, I would just echo Michael's comments about the capability and the quality of the teams that he's responsible for leading. We have very strong, and historically this authority has always had very strong finance and procurement teams. Claire, our head of procurement and commercial, is in the room, and we've seen that team significantly strengthen over the last few years. Our property services functions and customer and digital teams also have highly capable and talented officers working in them. And we are very, very fortunate to have, if you'll forgive me for saying this, I think actually the longest serving Section 151 officer in the country now working in this council, in terms of having held that designation for the longest period in local government. Thank you, Chair.
Thank you very much. And it is worth emphasising that as far as outsiders such as ourselves are concerned, not directly involved in the process, the whole risk management process is very much like an iceberg. We see the top of it, but what's underneath is far greater, and it is a matter of the whole team working together, and including those many parts that we don't see because they're lower down than the level that we need to examine. And it has to be said that I find the approach which there is in this authority to have improved significantly over the years. Right, so we'll move to the report recommendations. We're asked to consider the assurance provided over the adequacy of the Council's control environment and compliance with corporate governance controls, and no vote is required on this. Item 8 is our biannual report on consultancy and agency spend, and this will be introduced by Claire Ellis, who is our Head of Procurement and Commercial, and by Caroline Adu-Bonsra, who is the Head of People Services. Claire and Caroline.
Thank you, Chair. As you say, this is the biannual report covering spend on agency and consultancy, and this report covers spend in quarters 2 and 3 of 2024-25. Section 2 provides definitions on consultancy and agency staff, and those definitions are set out in the respective policies. Section 3 describes the overall trends on spend, and trends are reducing both in consultancy and in agency staff. So our spend is reducing over the period and over previous periods. Section 3.4 contains a narrative from the executive directors on the spend in their directorates. I'm happy to take any questions.
Thank you very much indeed. I'm going to ask the Chief Executive, if members don't mind, just to expand on this a little bit in terms of his perception as to the effect that local government reorganisation is going to have, first of all, on consultant spend over the next 2 years, and secondly, given uncertainty about staffing matters, agency staff.
Thank you, Chair. I think, first of all, on the issue of consultancy spend, it's probably difficult for me to give you an indication of what that may look like during the process of local government reorganisation. It is likely for some of the more specialist elements of what we will be obliged to do in abolishing 7 councils and replacing them with either 2 or 3 unitaries subject to government's decision-making. I would expect we will require a range of external specialist and consultancy advice. The types of things that I immediately think about are IT and digital, potentially property, but there are a whole range of other areas. I have to say, for example, the complexity of having to disaggregate upper tier council services covering children's, adults, special educational needs and education from a county council perspective in itself may well require specialist expertise that we can't source as an agency worker, and therefore may need to buy in services from external bodies. Michael may well have a view on this, having been in a previous unitary authority created through local government reorganisation as well. But if I'm honest, Chair, I think my immediate reaction to consultancy support and where that's likely to require the lion's share of spend will probably be around digital contact centre and technology related aspects, because even with the teams that are in-house in each of the 7 authorities now, there is such a large range of systems, processes and IT architecture that will need reconciled and managed. We will need specialist expertise. As members will know, that doesn't come cheap. And of course, at the same time, we have to continue services running and continue to manage cybersecurity as well. So that's going to become more complex rather than less during a period of both aggregation potentially of district council services and disaggregation of county council services. On agency staffing requirements and potential spend there, again, I think it's not unreasonable to assume we will see an uptick in agency spend. We've made some significant headroads in that, headway in that area, as you will see from today's report. But instability in council structures, whether in this authority or any of the other 6 in the area, will ultimately lead to a potentially higher risk of staff turnover, which means we may not be able to recruit in every case, which means we will need to backfill in some cases using agency workers. In addition to which, I think it's recognising the capacity constraint that local government reorganisation will create. We will effectively have one group of people working to set up the new councils, and then another group of people just in this authority, never mind the other 6, still having to effectively keep the lights on, deliver all the services and see the county council through to its end. Clearly, you can't have 2 sets of people without having double the cost, is the simple answer to the question from me, Chair. So I do have a view that we will expend more on consultancy over the coming years directly as a consequence of LGR. We will obviously seek to manage the cost with the other 6 authorities and make sure that we minimise any pressure on our budget and their budgets. So we want to drive maximum value for the taxpayers by doing that collaboratively. And on agency, again, we will probably see an increase just as a natural consequence of disruption, turnover, and dare I say, at the start point for new unitary authorities, I wouldn't be surprised if the agency levels go up even faster, because at that point, of course, we would anticipate that there will be a number of people choosing to leave local government employment as a consequence of restructuring, redundancy, or indeed eligibility to take their pensions, just pure demography. So whilst you're asking me the question from a county council perspective, I would actually say that from vesting day onwards, there will likely be greater pressure on the new unitaries on both consultancy and agency spend than we'll even experience this side of LGR. Thank you, Chair.
I'm very grateful, Chief Executive, for that answer. I think it's really important. There needs to be some expectation management here across the council as a whole, whilst we have quite correctly been stamping down on agency spend as far as we can, because very often agency spend is inefficient. If there's an alternative, that direction of travel is going to almost certainly going to change, and members of the council, not merely this committee, but members of the council as a whole, need to be aware that that is very likely to happen, let alone the expansion of costs on consultancy. Right, members, any comments or questions, please, on the report produced for Caroline or for Claire? Was that you, Peter? Sorry. Oh, Graham.
Just wanted to pick up on something Stephen said, that there's £6 million included in our medium-term financial strategy. Do you have any idea what the districts have allowed for agency and consultants?
Chair, I can't comment on specific allocations districts or Peterborough City will have made for agency or consultancy, but I do know that variable levels of provision have been made in each of the authorities for local government reorganisation, but I think I would probably say that's a matter for those authorities and their members. This authority has made some sensible provisions in reserves for LGR costs, and I think, as members have heard me say before in various committees, the total cost of LGR is a cost to the local taxpayer, irrespective of how else we choose to describe it. That's because government in the main expects those costs to be absorbed by the existing 7 councils in preparation for the creation of the new authorities. Clearly, I have my own view on that and whether or not reorganisation creates longer term benefit and payback. And of course, business cases have been built on that basis. But government is also making assumptions about the level of saving reorganisation will create at a national level in 2-tier areas. I would just say that were it my personal choice, and I'm caveating that, Chair, were it my personal choice, I would far rather be investing potentially 30 million or so in service delivery across 7 councils in Cambridgeshire and Peterborough. But as I say, Chair, that's a personal opinion. Thank you.
Thank you, Chief Executive, but it is an informed personal opinion, I have to say. Any other comments from anyone? No. Well, thank you very much indeed, Claire and Caroline, for that report, which we did read. It is going to be a challenging time ahead, both on agency and on the procurement of consultancy. So I fear that when we hear this report in 6 months' time, let alone in 12 months' time, we will have a direction of travel which will not be welcome to the committee, but which will be inevitable as a result of LGR. Thank you very much indeed. Members, so we've had all our questions and comments on that. The report recommendation is just asking us to note the report, so no vote is required. We can now move on to the debt management report. And again, this is a biannual report, which is introduced by Tom Kelly, who's the Service Director for Finance and Procurement, and by Alison Balcom, who's the Head of Service. Tom and Alison.
Good afternoon, Chair. Thank you. This is our regular update on debt management, as you say. If we take the committee firstly to page 213 and look at the table on that part of the report, I'll just draw attention in particular to a couple of the lines there. So on the grand total, the overall amount of debt outstanding, we see an improvement, some substantial improvement on this time last year from 42.8 million down to 31.2 million. That overall position we're pleased to see improve. But set against that and within that number, we know the adults health and commissioning number, and particularly client contribution debt, are worsening, approaching 4 million between the position 12 months ago and the position reported here. In terms of that adult social care position, if I take the committee then on to page 215, and it's in particular highlighting it's our most aged debt that is of concern within that category. So this has increased, as I've said, and it's more problematic, particularly to collect debt as it ages beyond a year and into 730 days. And the committee may remember from the previous update that during 24-25, the council made progress with our financial assessment backlog. That in itself was a delay in conducting financial assessments, so how much people receiving adult social care should pay. So sending out bills in some cases that were backdated, and what we're seeing now is that feed through to difficulties with collection. So that's what we're focusing on. On the other hand, we set out on page 214, actually, we're continuing to make progress with some of the volume of debt. So actually, over the last year, we've seen a 13% reduction in the number of cases in adults where they've got open debt amounts. So we're concentrating on a smaller number of higher value debts in that category. Just take the committee then to page 216. I won't go into detail around this table, but the first thing to say is we've seen some further improvement in the subsequent month since the report was published, particularly in that most aged category. I think we've got a further 220k improvement there. And you can see through this table the breakdown against some of the different major categories of debt. So deceased cases, for instance, cases with legal, and cases awaiting action by the Court of Protection or a property sale, for instance. And again, Alison and I personally looking at this closely at the moment, and some further improvements to come through property sales in the spring, which is helping that position. Alison will talk a bit more in a moment about the actions we're taking at the moment to focus on this position, recognising particularly in the last few months we have seen that worsening in adult social care. We've got a number of areas where we've increased capacity as a response to this, and having this work report through to the board that myself and one of the service directors in adult social care chair. So through the business plan, we've increased our capacity in the debt management team, so additional staff in that area. One member of staff we've been able to make permanent, and a further member of staff we're currently recruiting to. We're continuing to look at the supervision arrangements in that team, and reassigning capacity from elsewhere in the directorate as well. So making sure we've got finance business partner support to make sure we've got an analytical grip on this position. And we've also got an interim improvement specialist engaged in this area recently to really kind of focus what we can do on process improvement and making sure we are sufficiently digital. At which point I'll probably just ask Alison to outline some of the specific actions and measures we're taking in this area currently.
Thank you, Tom. So in terms of digitalisation, we've embedded the SMS text reminders. So that's moving forward nicely. And since the last audit committee, we've implemented the paperless DDs, the paperless direct debits. So we've got 200 that have been taken up since February. So that's a really positive movement, and we continue to push those out. In terms of the improvement project, as Tom stated, we've got somebody leading this project. We've got 8 work streams that have been scoped out, focusing. One of the main focuses is customer journey. So we're working with adult social care really closely on that journey, seeing through to the debt. We're also looking at how we can secure that debt early through DPAs or securing the property charges. And adults are in the middle of drafting a paper for DPAs. So that will be circulated on our website in due course. We're reviewing any of the service users that are fully costed and looking at the assessment process in there. So we're working closely with them. And then we're having a deceased review. So we're having a thorough review of the deceased accounts. In the last 2 months, we've cleared 153 accounts, 1.65 million. Some of that is natural. We've seen 400K's worth of property sales in the last few weeks, which is pushing that debt forward. So we are seeing that market in the property sales improving. So that's some good news there. Some of the invoices have also been paid, and we're rolling out quarterly statements to the deceased customers. We're focusing some more on the digital side, looking at where we can improve technology internally, Power BI, use of Microsoft Forms. We're looking at how we manage the debt portfolios. We implemented new portfolios 2 years ago. We're reviewing those to make them more effective. And we're also doing some exercises on collectability assessments, focusing on that really difficult debt that's quite complex to collect. Is there anything else, Tom, do you want to add to that?
Thank you very much indeed. Members, any questions? Ricky first.
Thank you, Chair. I welcome that we're making progress in the reduction of debtors. I think that's a fantastic trajectory. And I welcome that there's new systems being implemented and taken up. That's great. But I'm looking at the tables and the ASC debt is obviously aging badly. I mean, we have 365 days plus days that we're up. So we got, what I can see is write-offs of 976,000 and a provision of 9.4 million that's up. Why are collection rates falling there, if I can ask? Thank you.
Tom?
So in the analysis we've done, that aged debt bracket where we're trying to collect debt when we're sometimes having to present bills that are reaching back a long way and therefore present a large amount in one go, that can be particularly problematic. We're seeing that with debt collection. So in the analysis we've done, we know that some of these are issues that are facing councils across the country in terms of the number of clients we'd serve and the wider economic environment that people face. We're also looking at some of the ways that Cambridgeshire processes cases at the moment. And in particular, there seems to be an issue around cases where we're not receiving people's financial information. So sometimes when people are financially assessed, they don't want to provide information about their financial circumstances. And that may be because they can afford to pay and they're then under no obligation to pay the council. But where we are in those cases full costing people, because we don't have any information about their financial position, in a minority of those cases, we're then struggling to collect that debt. And we think there is something particularly about how we're following that process and encouraging people to provide information that we can look at and improve in Cambridgeshire. So that's one of the areas we're giving attention to. I think that's what I point to at the moment.
Ricky?
No, thank you. I appreciate that. I mean, you mentioned that some of the issue is we're presenting them with a large amount sort of in one go. Are we able to not do so, to sort of encourage payment And I mean, maybe that's the reason why people are unwilling to put their financial information forward, because I mean, as someone who pays debts and bills myself, when you get a large bill, you might be able to afford it, but you're going to struggle. And people don't want to struggle. It's a cost of living crisis and people are really, really struggling. So maybe if we're able to go to them with, with lower amounts, that might encourage more uptake in the financial information. I mean, that would be my recommendation. I don't know. Are we looking at that? Is that something we're going to do? It'd be interesting. Thank you.
Yes, absolutely. And so Alison's talked about some of those measures already. I think what we've seen, the council has made really good progress in improving its timeliness of financial assessment. So people are receiving financial assessment quickly and on time now, and that means that backdating issue is less prominent. So that the issue we've got there with backdating is sort of frozen in our debt and it's moving through and becoming more aged, but we're not seeing it with new cases that are coming into the system to the same extent now. And then some of the other measures, so where we're talking about making it easier to set up a direct debit, reminding people to pay early on through SMS, the whole customer journey about how social workers talk to clients from the beginning of their care journey can really help people start paying and get sometimes provisional charging in place as early as possible so that payment starts and is part of kind of normal monthly pattern of behavior then and doesn't escalate.
Thank you, Ricky.
No, thank you. It just leaves me with one more question then. So with, as you've explained, these new systems and progress with obviously new debtors and being able to present them with a smaller amount of repayment at a time, do you therefore then foresee that the age debt will start to come down? I know because it appears it's going up now, but do you foresee it now coming down going forward? Thank you.
Tom?
Yeah, we've seen a positive impact this month. The 730 plus has reduced 220k this month, and some of that's through working through that really complex old debt. And we're trying, as Tom has alluded to, we're working with assessments in terms of follow up for where somebody hasn't returned their paperwork, rather than build up that debt and fully cost them, see if we can catch it much earlier and a more accurate bill. But it's just that front door with the social workers and those first conversations around those assessments.
I'll just add on that, and some of the analytical work that the finance part of my team has done has given us that good foresight. So we can see debt aging, and it's happening, I'd almost say, in slow motion. So things may get worse actually for the next 3 to 6 months or so, but then we can see that newer debt, we've got less of those issues. So we would expect it to improve or at least plateau from that point onwards.
Thank you. Mike?
Yeah, I was just wondering, when we're talking about debt, that part of the problem is that we don't have the full information. Presumably a fair bit of that is going to be debt which actually shouldn't be there at all. And when you get the full information, you'd say, well, there's reasons why we wouldn't charge this person. So I don't know if there's ways and means. Clearly talking to people earlier is a lot of the key to this, but a lot of people might find that if they give the information, their charges would actually be less. So yeah, I'm not sure how we deal with that in the statistics as well, that we might have a lot of debt that's on our books, but actually if you fully investigate it, it's not actually money that we would take anyway. And of course with adult and social care, I think the point I'd like to make is it often is very, very sensitive, and that people are going through things, and it can be quite difficult, and I understand that it's a difficult job to collect some of this. Thanks.
Thank you, Mike. I think that's a really important point, because it's easy for us to look at these numbers and think this is a finance matter, but very often it's not the finance team which has responsibility for it. It goes back to the service departments concerned. Tom, would you care to comment on that?
Well, no, just to say it's exactly that issue as Councillor Black has outlined, and you sort of throw into that mix as well. It becomes more complex after people have died. Sadly, often there are difficult family relationships. So that is why we're closely focused on that issue, and we do, in terms of the figures, there is a procedure the council follows to credit accounts. Once more information comes to light, it's not for a lack of investigation by the council, but sometimes it is possible to get further information at a later stage. So we do see in some cases credit adjustments where further information comes to light, and that reduces the debt total. Yep.
Thank you. Lewis.
Thank you, Chair. And just to clarify on Ricky's point, because I think it's a process that we follow, and you can also correct me if I'm wrong, Tom, but the needs assessment is first. It's not like, so it's a needs assessment, then the care starts. Sometimes it's rushed because, you know, they come out of hospital and that's an urgency element to it. And then the financial assessment is when it kicks in, and then we start to charge. And that is where really useful tools like the direct debit may really come into fruition in the long term. But it's that order, so it's very difficult to actually advance any position on payment to the users before that financial assessment is done, and the care has to start because that is our statutory duty. So that is the order that alters the way we go about it.
Thank you.
Thank you,
Yes,
Chair.
Tom. Yep.
Yes, that's absolutely right. I mean, it's important. I'm sure we've all got relatives in this, knowing this situation, and you often you're dealing with people on the interface between NHS services, which are free at the point of use, and social care, which is means tested, and it is a complex area in terms of entitlement to intermediate care, which sometimes the council provides. Sometimes that's free for up to 6 weeks. You know, the charging approach varies between community-based care and residential-based care, and when property is taken into account, for instance. So it's a complex task to explain to people to calculate. But the earlier we're having conversations with people about you will need to contribute to social care if you can afford to, and setting them up for payment processes, that does help us. So that's why there's such a focus on that customer journey and getting sort of upstream to prevent debt materializing down the track.
Thank you. Yes, and adult social care, of course, accounts for a very significant proportion of the total debt that we've got, but it's even greater in terms of the number of accounts we're talking about, because the individual amounts involved don't tend to be in the hundreds of thousands. They tend to be in the tens of thousands, or more often the thousands. So it's both a high volume area of work, but also a high value area of work in total. Ricky.
Thank you, Chair. I've just got one more question then, because I think Councillor Black made a good point, and it's just really for my own clarification and understanding, really. So in them situations where we find that the debt is not actually owed, is that what are we seeing some of that in the write-offs? Is that that's not the same thing? No. Okay, no problem.
No, we are quite careful to treat it very differently. That write-offs is where the council is owed money unequivocally, and we're saying we're not going to collect it, whereas a credit is where we have sufficient information to say, had we have known that at the time, we wouldn't have expected that money to be due. Yeah.
Thank you, Ricky. Oh, yes, Graham.
Well, in relation to the write-offs, you've mentioned the figure for 2025 being 976,000. What was it the previous years? And has that gone up or not? And is there a reason for it? And then while you're thinking of the answer to that, is this something which internal or external audit should be looking at? There's an awful lot of money still involved in debts, and I would have thought it's something which should be a topic of interest for our auditors.
Thank you, Graham. Tom.
Well, Alison has very helpfully got the figures in front of me, I think. So in terms of write-off, we are down on the previous year, so it was 1.7 million, I think, in the 24-25. So it's good in a way that we've written off a smaller amount, because that is a charge on the council's account. But to some extent, it's also a measure of how closely we're keeping on top of making sure that is collectible debt, and we'll be looking at that closely as we go into LGR as well. We have had internal audit coverage in this area, which has been helpful, and it's identified further improvements. I think that continues. In terms of external audit, one of the areas they look at is kind of covered in section 2.3, so the balance sheet provision for doubtful debt as well, making sure that we're not kind of overly optimistic about collectible debt in the future there as well. So.
Thank you. Graham?
I accept that about internal audit, and perhaps I need to go back to the audit report and see whether all the recommendations are being taken account of. But for external audit, it's more than just looking at the balance sheet. It's, are we following the right processes that internal audit are recommended for us?
Yes, well, I guess we're in the scale of the council's total income, and thinking about materiality from the external auditor's perspective, this is at, I would say, at manageable levels and what you would typically expect in a county council. So external audit, when they do their financial statements audit, without putting words in Emma's mouth, would be they're kind of focused on some of those balance sheet numbers. It may feed into things like value for money, but I don't think we've got a kind of significant risk identified on that side of the audit at the moment.
Thank you. Emma, do you want to comment on that?
I think Tom's essentially said it for me. So so from a materiality perspective, obviously it's not significant in terms of that number. So whilst we will look at it to understand any significant movements in it, we wouldn't necessarily do lots of detailed testing because of the materiality aspect. But from a value for money perspective, if we thought that there was issues around debt collection, that's where that would fall through in terms of those arrangements being in place to make sure that there was appropriate.
Thank you, Emma. Graham?
Well, the fact that this has been going on for so many years, I just feel personally that it's something we should certainly keep an eye on, and you are. We keep being told things are going to improve, but in adult social care in particular, they don't seem to. They have improved, no doubt, in many other areas, but I just think that it's something we just need to keep on top of. That's all.
One of the problems that we've got, Graham, as you're aware, with adult social care is how complicated it is and how many steps there are to take. And in many cases, we can't take an initiative because we are waiting for probate or we are waiting for a court action. So I think that you're quite right to identify adult social care as something we've got to keep our eye on. And potentially that's something we might come up to when we talk about our agenda plan for the future, because I think that it's well worthwhile with a relatively new committee again to go through adult social care and to explain where we are with that and what our difficulties are with that, because it now, and as opposed to what it was in the past, I'll come to that later, but now it is the most significant element that we've got in the debt profile. Lewis.
Thank you, Chair. Yes, and again, just to take that and going forward, the debt that we have collected already is there, but going forward, and I know how complex is the situation to assess people initially, but the question that I would like to ask is whether we have the capacity in terms of people and staff to be able to jump in at an early stage and try to determine that, so we can actually build people and form those financial assessments early on, and then so people can be in a situation when they can also, program their payments, is whether we have that capacity to intervene early on.
Thank you. Tom?
Yes, so I think that part of the explanation for why we've got a better understanding of why the debt position has drifted upwards, so we're able to give the reasons for that. Partly that's number of clients, partly it's our approach to charging, it's partly that financial assessment backlog. So that, I think, informs, that is the backdrop to understanding why we're seeing the picture that we have. As I say, in terms of the debt team, we've increased capacity through the business plan this year. We had a case really where capacity in that team hadn't kept pace with the number of people we were billing, the amount of money we were billing. obviously it is it's an enabling or corporate service, but it absolutely is activity related. So it was important we kept it in step, but we are continuing to keep that under review and may need to look in business planning again, both on the debt recovery side and in financial assessment in terms of whether we've got enough capacity there. Alison's team also works with the equivalent teams in the two Northamptonshire unitary authorities. So again, that's quite a useful benchmark. And just very quickly on Councillor Wilson's point in terms of improvement and higher risk areas, we are very pleased there's been that improvement compared to 12 months ago on the NHS debt level, because I think that would have started, in terms of the pool budget note and the aging of that debt, that would have been a kind of growing risk factor for external audit had that not improved or needing to roll into a second year of accrual. So it's good news that was resolved.
Thank you, Tom. In fact, on that subject, the numbers are quite stark in terms of the reduction, but then that shouldn't really be surprising because the majority, I believe, the overwhelming majority of that debt had been for the Section 75 arrangements for learning disability. And I'd be interested to know two things. First of all, of the current figure of 2.5 million NHS services, how much of that is still to do with the old Section 75 arrangements we had with learning disability? And secondly, of the fall that there's been in the debt, how much has been caused by us issuing credits, putting through credits or writing off, rather than necessarily the NHS making the payments that we were hoping for?
So I'll have to come back to you, Councillor Bowden, on the detail of those amounts, but off the top of my head, very little of that remaining amount is in relation to the LDP, and there hasn't been substantial credit either. We reached a position that was largely favourable. Just briefly on NHS, what we're aware of, it's obviously been a major reorganisation of the NHS in recent months, a merger of organisations. So we're taking steps to make sure we recover debt from those sometimes outgoing organisations. And we do have the majority of this actually relates to individual client joint funded contributions, I think particularly for the older people's client group. And some of it is beyond the Cambridgeshire ICB and into wider other parts of the country as well. So we're focused on those issues, particularly, as I say, that given there's been this reorganisation. Thank you.
Thank you very much. Any other questions from anyone? Tom, you were kind enough to send me some further information as a result of the inquiries I was making about the unapplied income. And I was particularly surprised to see such a large percentage, 2/3 of it, for the overdue monies, both for the previous month and the last year figures, being from commercial income as opposed to anything else. And I was, if we're talking about unapplied income, which create credit accounts, I'm just surprised that there should be so much money coming in from commercial activities which are allocated to an account and there's no invoice against them, there's no cost against them. And we know there are plenty of reasons why that can happen, but one of them can be our system fails to get the invoice and get it posted correctly in the first place. To what extent do we find that the unallocated income, when investigated, actually indicates that we've got a problem on the ledger in terms of getting our invoices on the system in the first place?
Yes, so thank you for notice of interest in this area, Councillor Bowden. So this relates to unapplied income. So it's the matching of income that arrives in the council's bank account, either to an invoice or to or as credits. I should probably clarify first of all that commercial category is quite broad. So it's not just the council's commercial activities as we sometimes narrowly define it. In terms of non-service activity, I think it will encompass all of our kind of third-party spend on commercial organisations. So across the the wide range of things the council does in frontline services that go through to third parties. So that's why we've got those amounts. I think there isn't necessarily a structural problem there in terms of matching to invoices. It is sometimes just income arriving without clear reference information. Sometimes we've got hundreds or even thousands of invoice lines or line items with particular commercial organisations, and then it's kind of relating that across. Alison, I don't know if you want to add anything on that.
Yeah, we often struggle getting the remittance advices from the commercial organisations, and then we don't know what to allocate the invoice to. So that has been particularly challenging, particularly in the NHS as well. What they send over doesn't match what our invoices are, so we do have that challenge.
Yes, I remember the problem with the NHS. I had a specific question. Have you found cases where the income has turned up and we haven't been able to match it because we didn't have the invoice on the system at all?
Sorry, NHS has been previously, we've seen it there, but we haven't seen it necessarily in the commercial. It's literally, we have that money, we don't have the remittance, they don't provide the right remittance. Their system may be very different to ours. It's how, particularly in providers, it's those payments where you might get £1,000 in. We don't know what that's made up of. It's very tricky.
We can see it sometimes as well where commercial organisations discontinue. So you may have a care home that stops providing services, and then there's a disconnect between the transaction flows between the council and where standing orders, which does tend to be more individuals than commercial entities, sometimes continue without the council necessarily expecting that to happen, and we need to then keep it ring-fenced in case people come for refunds.
The responsibilities of a council of a public body are rather different from the ones of a commercial organisation. In a commercial organisation, we're not necessarily too worried if people are paying us lots more money than we might have expected. And we might want to find out if we've got a problem with our system, but it's not top of our list of priorities. However, with a public body, we have a public duty, do we not, to return that money to the people who've sent it to us if we believe that it's been sent to us incorrectly. Do we end up sending back quite a bit of this unapplied income, especially if it hasn't been identified for many months, and if we believe it's the error on the part of the company or the organisation which has sent it, or are returns of monies unusual?
So we do return money with individuals. As Tom alluded to, the standing orders are set up. Somebody may be deceased. Those standing orders have continued. We can't stop the standing orders. Direct debit, we can stop. We can't stop a standing order. But we do have a process with our adults finance team in terms of refunding the money back if we've got somebody that we've got a relative, next of kin, legal power of attorney. If we haven't got that, that's where it sits on the account for several months. But we do have a process for refunding that money.
Good, thank you. Any other comments or questions from any members? No, well, we can move to the report recommendation, and the committee is asked to note the actions and approach being taken to manage income collection and debt recovery, and no vote is required for that. Thank you very much indeed, Tom and Alison, for your presentation and for the answers to the questions. Agenda item 10 is the agenda plan for the committee. Democratic Services Officer, would you advise of any update to the published report, please?
No changes to the published papers, Chair.
Thank you very much indeed. I think it was Graham or Lewis. Do you think it is worthwhile us asking for adult social care debt in particular to come back to us at some stage as a particular report to explain what happens there, what the processes are, what the problems are, so that we are better informed? Do you feel that there would be a value in that?
In November 2026, there is the normal debt management update, followed by the Executive Director for Adults Health and Commissioning update, giving his assurance report. So we could combine the two, or say to warn Patrick now that we do wish to discuss adult social care, but debt in particular at that meeting, if that was appropriate with other people.
We can potentially expand what we've got in November 2026 to include the adult social debt invoicing and debt process in more detail than would otherwise normally be given to us. Is that acceptable to members? Lewis.
Yes, Chair. not only that, is more the process, the whole process from the very beginning, from assessment, start of care. I think it is important for all of us to understand that process and to see whether there is capacity or we need to do something about it to implement the processes there to lower the risks and to have.
What has struck me over the years with casework on this matter is how people who are very financially literate still have difficulty dealing with the whole process because it is so complicated. And I'm not surprised, to be quite honest, that we end up with so many problems in terms of the debt, in terms of correct invoicing, and in terms of the corrections which need to be made. Not all of which are of our fault, I have to say, but it is an awfully complicated area, and it's important, I think, that members of this committee are aware of why it is difficult to get this right first time, and why, even if you get it right first time, it can change remarkably quickly within a month or two because of changes of circumstance or changes of another sort. So yes, if we could expand in November 2026 and say that we're particularly interested in discovering more about the whole invoicing process within ASC, that will allow the director to have a good notice of that question. Michael.
Chair, maybe that we could do a training session before the committee and actually go through the process rather than actually take the committee time in terms of that question, so that those that are able to attend can understand the process in advance.
That may be extremely helpful as a suggestion. Are you suggesting an hour before the meeting, or are you suggesting at some other date?
I'll leave that for us to kind of work out outside of this meeting, because it might be something that you'd want in advance so that you can then read the report, but I'm not sure whether timing will allow that. But certainly before the meeting, if it has to be just an hour before, then that might be helpful, but certainly before the meeting.
I think that's really useful, and if we can leave that to the Democratic Services to consider, that will, I think, help the committee as a whole. Are there any other points to do with the agenda plan? Ricky.
Thank you, Chair. The only concern I've got is in regards to LGR and its costs. That's the only thing from today that I've taken I'm really not comfortable with. So could we add maybe at some point an LGR cost scrutiny item of some sort?
I'm going to pass this to the Chief Executive. I've got no problem with that in principle, other than that it is awfully difficult to tie down at any one time. Chief Executive, have you got any thoughts about that? Because it is a big area of expense.
Chair, I'd just clarify, obviously, the important part of Audit and Accounts Committee is overview of financial systems and control amongst other governance items. However, for proper scrutiny of expenditure on local government reorganisation, as you might anticipate, I'm going to say that is properly reported through to the Strategy, Resources and Performance Committee. And indeed, at that committee's next meeting in July, because of the outturn report coming forward for the financial year just concluded, we will be reporting on LGR spend for the previous financial year from the perspective of this authority. I would expect us to continue to report on expenditure against LGR through the normal integrated finance monitoring regime. So that would go to SRP on a routine basis as part of financial monitoring to enable member scrutiny there. Of course, Audit and Accounts Committee, if you perceive there to be a specific requirement to bring something here in the future, is perfectly within your rights to request that as part of your forward plan. Thank you.
It's very helpful. I just wonder whether we can distinguish between the reporting on the expenditure, which quite correctly, as you say, goes to strategy, resources and performance, and the processes which are set up so far as the control is concerned, particularly with the joint committee, with the voluntary joint committee, with the statutory joint committee, and with the shadow authority. It's going to be quite a complicated process, and 6 other existing authorities as well. And maybe that process and the controls over the overall process is a suitable thing to come back to Audit and Accounts Committee without necessarily dealing with the actual numbers involved.
Chair, yes, happy to look at that with the Service Director for Legal and Governance. I would also just note that for the benefit of members, if memory serves correctly, we do have a member briefing session all councillors, that's open invitation as part of the member seminar programme desperately looking ahead. On the 5th of June, where I will be talking about the very subject of LGR, the process and some of those issues. Obviously, that will be recorded, as is always the way with member briefing sessions and development sessions, and will be available on the member development platform, but that would provide a good precursor to any future discussion here. Thank you.
Thank you very much indeed. But as I'm sure you appreciate, that will need to be several days long in order to even touch the surface of what is an awfully complicated and difficult subject. But thank you very much indeed for reminding us about that. Any other comments from any members? No. Well, we'll note the agenda plan with those further comments, and no vote is required on that. And item 9 is committee training, which we've already touched on. This has been updated to include dates for most of the training plan to the end of the year, and calendar invitations will be sent out after this meeting and will include substitute committee members as well. Are there any questions or comments? No. So we're being asked to note the training plan and no vote is required. And that, I'm pleased to say, concludes today's meeting. We're only, well, in fact, we're 1 minute ahead of schedule, which is absolutely excellent. The next committee meeting is scheduled to take place on the 24th of July, and I declare the meeting closed. Thank you very much indeed for your attendance, and thank you for those who've been watching us on YouTube. Thank you.